Hi, I'm Pattu from freefincal. The government announced that the PPF and SSI rates, the Sukanya Yojana rates, have dropped by 0.8%, and this 0.8% drop is the fourth biggest fall in the history of the PPF. I'm preparing an article on the history of the PPF, and I'll explain in the article why this is the fourth biggest fall. But if you're worried about it, well, you should be, especially if you're a senior citizen, and especially if you know senior citizens um, who have not had any kind of exposure to the capital markets, then you should be worried about this. But for those who are middle-aged young earners, they still have some time to rethink their investment strategy, because the interest rate is going down. We are on the interest rate gradually the interest rates are being eased, and of course interest rates are cyclic. They will move up and down, but they will move up and down as they're gradually going down. So there will be a gradual shift to lower and lower interest rates in the future, and it is if you are at least below 50, then I think you have some time on your hands to rethink your investment strategy. Now, before I begin, I just want to quickly tell you that 16 entrepreneurs and small business owners have shared, probably many of you who have seen this video, because I requested that some of you share it. I sent the Google Forms link. Some of you have shared their worries and concerns and how they are managing the lockdown. Please do read it. These are very interesting real life stories from very, very different walks of life. Now, I had talked about the evolution of PPF interest rates in an article a couple of years back. Now, several committees constituted by the finance ministry have recommended the government to change the high interest rate and set the interest rate to align with market rates, that is the 10-year gilt yield for at least PPF and SSY, and corresponding gilt maturities for other post office deposits, 5-year deposits, etc., and so on. And they had recommended a quarterly reset of this rate so that it is more in line with the market rates, and the government agreed to it finally in February 2016. And the 10-year yield is usually taken as the benchmark yield, and they propose that the Sukanya Samriddhi account, SSY as it's called, will have a 0.5% higher rate than the prevailing 10-year market yield, and PPF will have a 0.25% higher return than the market yield. To find that out, if you look at the last 3-month 10-year bond yields from investing.com, the December 2019 yield was the closing yield was 6.65%, January 6.6%, February 6.37%, and the average is 6.51%. And if I add 0.75% to 6.51%, the Sukanya rate should be 7.25%, and the PPF rate, if I add 0.25% more, it should be actually only 6.75%. But the actual rates which are declared are 0.35% more. It is 7.6 for Sukanya and 7.1 for PPF. So the government has actually added 0.35% more than what it should be. And in September 2016, I had pointed out it was 0.5% more. So now the spread has come down a little bit. That's good. The gap is reducing. But then it is bad news for senior citizens. There's not much they can do. They have to reduce their lifestyle. Please don't allow your children to manage your retirement portfolio. They will screw it up in the and they'll say, I will take care of you, and they'll screw it up. Don't do that. Stick to fixed deposits, save fixed deposits, post office fixed deposits, senior citizen savings schemes, etc. Do not get into debt funds. If you have never done it before in your life, do not get into all these cooperative bank FDs, small finance bank FDs, and all that. That's just crazy. Do not get into equity. Do not get into balance advantage funds, monthly dividend options, in the hope of getting higher dividends and so on. That's just nonsense. It will backfire. It will reduce your capital. There's a huge risk of capital in all this. Don't do all that. Just if you do not have experience in capital markets, stick to safe fixed deposits. You will have to reduce your lifestyle. There's not much else one can do. But for people who are less than 50, there's still time for you to reconsider and get taking on some risk into the capital markets, and have some shot at trying to beat inflation and keep your returns well above the inflation rate, because the way things are going, the rates are going to go lower and lower. Of course, it is not going to go in one direction, because the equity markets move up in a nice bull run, then inflation will increase, then the rates will grow up a little bit. It will be the rates will be cyclic and it will oscillate, but it will be oscillating on a downward trend. So over the next 10 years, 15 years, you can expect PPF rates to go down significantly more. So I'll get back to writing that article on the PPF interest rate history. I'll catch you later. Bye bye.